All right, welcome back to the Know Your Numbers podcast. This is your host, Chris McCormack, and today we will be continuing our discussion on the 6 keys to increasing your real estate revenue through tax planning and accounting. So today we'll be covering key 1. If you are new to this show, go ahead and listen or watch our first episode, just one episode back that went into the different 6 keys. It was really an introduction on the 6 keys and what we'll be covering as we embark on this journey through the 6 keys. And today we'll be diving into key number 1. If you or anyone you know can get value out of this or is going through a tough time financially with their real estate portfolio, maybe you're having trouble with this topic that we'll be covering, which will be the idea of clean accounting and bookkeeping, go ahead and share it with a friend. Or if you get any sort of value, go ahead and leave us a 5-star rating and review, because it helps us get in the eyes and ears of listeners just like yourself. We know that there are a lot of real estate investors out there who are confused around accounting. They're stressed out about accounting, and we provide this to just help you achieve that peace of mind that you thought you were getting when you went into the real estate space and were looking for passive income and a secure financial future. So with that in mind, we can jump right into it. Key number 1 to increasing your real estate revenue, which in turn increases the peace of mind and the confidence you have in your real estate portfolio, is the ability for clean accounting and financial records to eliminate chaos and errors, as well as costs. Now, we deal with a lot of business owners, we deal with a lot of real estate investors, and we often say that the best tax advice I can give you is to keep track of the income and expenses on a regular basis. And oftentimes we find that it's best for you to just get this off your plate entirely. But for those that are just getting started, there is no better time for you to be implementing some of these systems or implementing some of these habits that we talk about, because keeping clean records, again, eliminates the chaos, it eliminates errors, and it sets that foundation. I believe I mentioned it in the first episode, the original introductory episode, that a lot of accounting is about the fundamentals, right? Everybody wants this quick fix, or everybody wants this supreme idea that's going to keep every dollar in your account. But when I meet with our clients one-on-one for the very first time, I say that the best tax advice I can give you is to get the foundation right. We don't build the house just from the siding or put the windows in and then lay the foundation. No, the first thing that you do when you build your portfolio, if you're doing a build to rent or a complete gut job and a rehab job, you're going to make sure that the foundation is secure, right? One of the biggest reasons people don't buy a property is because there are cracks in the foundation, right? And they know it's going to be a costly endeavor. And it's no different in the accounting world. If your foundation has cracks in it, if you get this wrong from the very beginning, it's going to be a lot more costly in the future than it would be if you got it right from the beginning. And maybe you're one of those investors that knows they don't have the foundation right, and they've been going 5 years, 6 years, 7 years, and the books are a mess. And you're worried about what the IRS would say if the IRS came in, or you have no idea how you're performing on a month-to-month basis, and you're not able to even tell your investors or your husband or wife how your portfolio is doing. We can solve that problem. It takes a lot of effort to solve a problem when you're 5, 6, 7 years down the road and you don't have that foundation, but there's no better time than the present. Just like somebody would say, when was the best time to invest in real estate? 20 years ago. When is the second best time to invest in real estate? Right now. When is the best time to get your books right? At the beginning, in the beginning. When is the second best time? Right now. So if you find yourself 5, 6, 7 years down the road with cracks in the foundation, maybe you've gotten the walls, you've developed good windows and siding in your real estate portfolio, right? Maybe you have 10, 12, 15, 20, 100 properties under your belt, but the foundation is cracked. You don't have the key financial indicators that you can rely upon that can build confidence and grow your certainty that you're on the right path. It's time to fix that. It eliminates the chaos, right? We had a client, Kate and Penelope. They weren't necessarily in the real estate space. They were business owners, but they were looking to do some serious tax planning, and their books were a mess. They were going back to 2021. The books were out of order. There were 50,000 uncategorized transactions that totaled 7 figures. I think that the variance that I saw, if I remember correctly, was about $4 million. That means that their QuickBooks was saying one thing and the bank was saying another. And the difference between all of that was $4 million. Now, for you that don't know what that could possibly mean, that could mean that expenses are overstated $4 million. It could mean that expenses are understated $4 million. It could mean that income is overstated $4 million, or income is understated $4 million. And I know that might sound like a lot of technical jargon, but in reality, what that means for the business owner is that you could be overpaying or underpaying taxes. And what's the IRS going to say when they find out you're underpaying taxes? They're going to say, you owe us not only the taxes, but you also owe us the penalties and the interest that goes along with those underpayments of taxes. Now, the opposite side of that, if your income is overstated $4 million, that means that you would be overpaying taxes. Say $4 million would put you in the highest tax bracket, so that's about 37%. 37% of $4 million is, call it $1.5 to $1.75 million of taxes that you would be overpaying if you're overstating your income by $4 million. And I know that is a lot of math and it might be hard for you to track, but the risk of not having your books set up, not only does it cause chaos in your financial life, in your business, in your personal life, but it also causes overpayments of taxes or risk of an audit, a failed audit, and the chaos that brings, or the interest and penalties that brings. And just so you guys know, our clients who had that $4 million variance, they were facing IRS notices. They were getting notices from the IRS and they hit rock bottom. They had no idea what to do. They had nowhere to turn other than to seek help. And had they hired us back in 2021, it would have been a lot less costly. They wouldn't have had to invest in so much to clean up their books. And the same thing goes for you. That's what I mean by it can eliminate chaos. If you wait until March to clean up your books and you come to us with a bunch of receipts and bank statements saying, yeah, this is my bookkeeping, well, that's going to be a very costly endeavor. And not only are you risking higher taxes as a result because you haven't worked with somebody to lower the taxes throughout the year, but investing in a bookkeeping cleanup is going to come with a large dollar amount because you didn't do the work to fix the problem before it arose. And now you're waiting till the last minute to fix it. And so it's a lot more costly, right? It's like a plane ticket. You're buying a plane ticket at the very last minute, the day of the plane, right? If taxes are due April 15th and you're coming to me on April 1 saying, here's my bookkeeping, it's a box of receipts and here are the bank statements. Well, that plane ticket is going to be a lot more expensive than if you bought it 40 days prior or even 2 months prior, right? And the same thing goes for bookkeeping. The same thing goes if you bring your car to a mechanic and you hear a noise that you know is off for months on end. And then next thing you know, the car stops working properly. You have to pull over to the side of the road, call a tow truck, bring it to a mechanic. What was a $100 issue has now turned into a $4,000 issue. And maybe you have to buy a whole new car because you waited way too long. And now you have to deal with the chaos and the costs that are associated with waiting. And so the first key to increasing your real estate revenue, it's a paradox, right? It's getting your bookkeeping correct. Because not only are we looking to increase your revenue, but we're here to decrease the costs, which in turn increases that profit. And so to decrease the costs of taxes or audits or bookkeeping, you have to get it right from the start. You have to invest right now because yeah, there's costs, but there's also a personal cost to you. How hard is it to keep going in your life, in your business, not knowing your numbers? How hard is it to fall asleep at night, stressed out over taxes? A lot of that stress is eliminated by just getting things right from the get-go. We had a client recently. She came to us because she was working with a tax advisor trying to get their taxes prepared, but her books are a mess. She's been categorizing things improperly for the past 12 months. And I sat down with her for an hour and we found $25,000 worth of what was categorized as income improperly, which would have, had she not sat down with us, cost her $6,000 in taxes, at least just on the federal level. And so we were able to clean it up, but that wasn't all. There's more work to be done. And had she not reached out to us, she would have been overpaying at least $6,000. Much more. I can almost guarantee that. And so the first key to increasing your real estate revenue, to taking care of your tax burden, is keeping clean financial records. Accountants aren't just in the business of providing you with a tax return. Accountants should be providing you with peace of mind, knowing your financials are taken care of. They're advising you on where to put money and how to put money and how to categorize certain income or expenses or capital contributions, right? These are accounting jargon, but they play a pivotal role in your peace and prosperity as a business owner, as a real estate investor. So the power of clean financial records to eliminate errors and chaos. You lower audit risk by keeping good records, right? The best football teams, they have a good offense, likely, but people often say that defense wins championships. And the best defense against the IRS is clean financial records. You will win your tax case time and time again if you have clean financial records that are up to date and can be defended. And this comes by working with the right team and making sure you're doing things legally and ethically to keep as much money in your account as possible. So defend yourself by keeping good, clean financial records. Eliminate errors. I told you about Kate and Penelope and the $4 million that was being attributed to accounts that it shouldn't have been attributed to. We cleaned up their financial records and now they have peace of mind. They saved $1.2 million working with our colleague on tax planning, but they couldn't do that without clean financial advice. They're free from the IRS, the burden of the IRS, and the notices that come on a regular basis. It eliminates the chaos. It gives you security and peace of mind. You can fall asleep at night because you know that your numbers are being tracked properly, that you're not going to be paying $60,000 to the US government when you should have been paying $30,000. And again, it lowers those costs. It lowers the cost of taxes, yes, but it also lowers the cost of those costly investments that you have to make if you don't solve the problem now, right? That the cost of a foundation that is cracking and about to fall through is a much greater endeavor than had you just laid the foundation correctly from the start. So whether you find yourself just getting started, whether you find yourself 5 years into real estate, whether you find yourself 10, 20, 30 years into real estate, the same thing goes. We need to get the fundamentals right. Steph Curry works on his dribbling. He works on his shooting. He works on his free throws every single day. Tom Brady worked on his passing. Randy Moss works on his catching. Like these, the all-time greats in the other industries that we know about, particularly the sports industry, they know the importance of fundamentals. Tiger Woods, these guys are at the driving range working on their swing on a regular basis before and after they play golf. The same goes for a business owner. The same goes for a real estate investor. The fundamental of your bookkeeping will save you hundreds of thousands of dollars over the course of your lifetime. That is key number one to increasing your real estate revenue. The best way to grow in profit is to increase revenue and decrease costs. This will decrease costs, not only financial costs, but personal costs. I trust this serves you. I'm excited to continue down this 6 keys to increasing your real estate revenue. If you got any sort of value out of this, if you know somebody who can receive this well and begin to implement it, share it with them. Leave us a rating and a review. And if you are stuck in the chaos of not having clean financial records, if you're worried about the IRS, if you think you're overpaying in taxes and it's causing you to lose sleep or lose properties or lose time with family, reach out to us. We are taking on new clients. We don't work with everyone, but we'd be happy to see if we're a good fit. There's links in the show notes. You can find me on Facebook and Instagram and LinkedIn. I'd be overjoyed to get to know you and see if we have what you need. Until next time, God bless you. Keep moving forward. We'll talk to you soon.